Hello and welcome to Bloomberg News. I have with me Shaktikanta, the Economic Affairs Secretary and one of the key authors of the budget that was tabled sometime this week in Parliament. Welcome, Mr. Das, to Bloomberg. At the outset, a budget that's been well received, no major controversies, no major things to be clarified after the budget presentation. And one of the cornerstones of the budget was how you managed to keep the fiscal deficit well in check while taking out money to boost capital investment. What was the magic? What were the challenges?
I think the budget has addressed the critical requirements of the economy today. On the one hand, there was a requirement for making public investment in important sectors like infrastructure, including roads, highways, irrigation and other sectors. There was a necessity also to step up the allocations for the rural sector, for the health sector. So the critical requirements of the economy has been taken care of in terms of providing expenditure allocations. At the same time, the economy also requires certain structural corrections and certain reform requirements are also there. So that also has been addressed. If you see the track record of the government with regard to reforms has been very strong, and even in this budget also, starting from urging the states to remove perishables from the APMC Act, or start in the agriculture sector, or starting from the center's the central government's decision to come out with a model law on contract farming, or in education sector the reforms to the UGC, or coming to the financial sector, the decision to abolish the FIPB, or even for that matter the formation of a oil major, or for that matter what you call the amendment to the Arbitration and the Conciliation Act to deal with PPP disputes. So I can go on listing. I mean, there are several measures which have been announced in the budget, and it addresses all the key concerns of the economy today, all the key requirements of the economy. In the taxation side also, in corporate tax, for example, the decision to reduce the corporate tax for 96% of the companies, which incidentally have a turnover of up to 50 crore rupees per year. I think all these measures, so this is a budget I think which has addressed all the key concern areas, all the and which addresses all the key requirements of the economy, and therefore I think it is found to be acceptable by a wide cross section of people. It has been appreciated by various sections of the society, various stakeholders of the economy. And the fiscal numbers, the revenue numbers, the expenditure numbers and all other numbers are also very, very realistic. So I think that is in sum, I think that is the essence of the budget.
Yeah, those are a number of things that you listed out of the budget. Two of them really stand out and I want to come to them one by one. The first one, you said about the numbers being realistic. That's something that even the rating agencies have appreciated, that India is stuck onto fiscal consolidation while boosting capital investment. Given that, you think the situation is right now conducive where possibly the central bank could look at interest rates because private investment is yet to revive?
You see, I would not like to comment on what the central bank should do or what are our expectations from the central bank. I would not like to comment on it in public because monetary policy is in the domain of the central bank, and I think we will leave it to the central bank. And I am sure they will take a very considered call and taking into account all aspects. But having said that, I would like to add that demonetization has ensured that lot of low cost deposits are today available with the banks, which would enable the banks to lower their lending rates and offer loans to various sections of the economy. In fact, the process has already started. As you know, about a month ago, the banks have already started reducing their lending rates. So this will have a very positive impact not only in loans to industries, to business, but also to individual loans, especially in sectors like, for example, individual housing loans or other kind of consumption loans for buying a car, for buying a motorcycle, or more importantly for buying a tractor or buying other agricultural equipments. So that I think is something which I would like to add, because that is a huge positive. That's a huge positive outcome of the demonetization.
Why I asked you was typically when the government sticks to a credible fiscal path, and you have a, in this case, you have a event like demonetization, which has led to a huge, influx of deposits, low-cost deposits in the bank system. Are the conditions conducive for an interest rate cut?
I won't like to talk on comment on that. It's a central bank call, and from the finance ministry, it will not be appropriate on my part to say that the conditions are conducive or otherwise or whatever. So okay, I would not like to comment.
We'll come back to the fiscal deficit part then. 3.2%. We have an FRBM panel which has suggested sort of a roadmap. When do we see that roadmap rolling out? And I mean, if we were to stick to the laid out path, this seems like sort of a deviation where we've taken a sort of pause from the suggested numbers. What was the reason that the pause was taken, and when do we see milestones of this panel rolling out?
You see, I will put it slightly differently than the way you have described. I would like to see it as follows. Number one, I don't think we have, or rather let me put it this way, the government has stuck to the principle of fiscal prudence. The finance minister has not in that sense deviated from the path of fiscal prudence. Committee recommended 3% for next 3 years. The finance minister and the government decided to adopt 3.2 and then thereafter go to 3%. And overall commitment to have a sustainable debt to GDP, that commitment remains. The commitment to reach 3% fiscal deficit also remains, but that had to be balanced with certain investment requirements, public investment requirements of the economy, which I mentioned a little while earlier. So I think in that sense, the budget, the fiscal numbers are very much within the broad framework of fiscal prudence. So far as the committee's report is concerned, we got it about 8 or 10 days before the presentation of the budget. We have gone through the recommendations, but the committee's report requires far more careful analysis within the finance ministry. It also would require some amount of consultation with a few other ministries and stakeholders. So we will do that exercise, and government will take the decision.
So what I understand from your answer is it suggested 3% for 3 years and a sustainable debt to GDP ratio.
That's right.
And when you say sustainable, is there a number to that sustainability?
You see, what the committee has recommended is 60% for the general government, 40% for the center and 20% for the states to be attained by 2023. So that is the roadmap which the government, which the committee has given. We internally believe that even with a 3.2 this year, we will be able to reach that target as envisaged in the committee's report.
Okay. I mean, that's one part of the budget. The other hallmark was, like you said, abolition of FIPB. Because its budget is such a big document, it in itself is a milestone event, abolishing FIPB. The FM also reiterated his commitment towards, ease of doing business and simplifying FDI regime. What would that entail in the coming year?
You see, FIPB has been in existence for more than 2 decades now. And I think it requires a lot of courage to, to abolish an institution, because in government typically institutions get created and they then live on forever. We had reached a position where a lot of liberalization in the FDI policy has taken place during the last 2 years. As a result, 90% of the FDI today comes in the automatic route. Only 10% of the FDI are cases which require government approval, for which FIPB was required. We want to further liberalize the process in the sense that we want to further delegate these powers either to the regulator or to the concerned ministry, but these are all illustrative cases. These are by way of illustrations I am mentioning. When the mechanism, when the modality of the the abolition of the FIPB is announced, the details will be spelled out. So take the case, for example, already defense projects, for example, up to 49%, they come to they require government, they don't require government approval, it's in automatic route. Beyond that, it requires government approval, so it comes to the FIPB. And up to 49% it was, it was put on the automatic route because any defense investment also would require a permission from the Ministry of Defense and would require a security clearance. So therefore, it was felt that why have multiple agencies, let the Ministry of Defence handle that up to 49%. So now perhaps, you know, we have reached a level of maturity across ministries in the government where the Defence Ministry can handle you know, investments in the defence sector even up to, you know, whatever is the permissible limit. And wherever there are FEMA related issues, the law is very clear, the regulations are very clear, and should the Defence Ministry have a doubt, they can consult the Department of Economic Affairs with regard to clarity whatever they require. So therefore, the idea is to make the process simpler, make the process faster by way of more and more delegation of powers to various ministries.
Would it also include liberalizing or doing away with some of the FDI caps that exist in some sectors?
That is under consideration of the government. The remaining areas where there is still requirement of government approval, that is under examination in the government. And once as and when any decision is taken, I think it will be.
But that is also part of this whole liberalization of the FM.
That's right.
Yeah, and as an illustrative example, is there any sector that comes to mind where you think, you know, it's already, I mean, we don't require, we can...
Well, before a government decision is taken, it will not correct on my part to sort
No,
of
but I'm just saying, if at all, I mean, if there's something...
Let's see, let's wait for the government
But we would see some
that.
kind of an action on the FDI caps.
Definitely.
Okay, fine. The other aspect is about electoral bonds and cleaning up of the election funding. There are some apprehensions that the anonymity of election funding doesn't go away with this. Would you say that's the correct
I would not agree with that. I would not agree with that. You see, the donor, if it's a company or an individual, whoever, the donor, he goes and buys a bond from the bank. Now, there is something called banking secrecy. I mean, you cannot access the information, how much money you have in somebody's account. You can't just, that information is not available in the public domain. You can't just ask for it under the Right to Information Act. Even a law enforcement agency, let us say the CBI or the Enforcement Directorate or the, let us say the income tax authorities, if they want information about deposits into somebody's bank accounts, then they will obviously, there is a protocol which they have to follow. So therefore, that information is not going to be in the public domain, and it's not an information which people can just easily access. Only the bank will know how much bonds they have issued to whom, because the money will have to be from a KYC compliant account, either by way of a check or by way of any other digital means. Then the bond carries anonymity with it because nobody's name is written on the bond. And then a limited time window is given within which it has to be deposited in the political party. The political party also will not know who has deposited it. Of course, the donor may privately like to inform the political party, that is between him and the political party. But the political party, on the bond, there is no information who has donated this particular bond. If somebody wants to absolutely maintain anonymity, he doesn't have to go himself. He can send somebody else also to go and give it to the political party. So therefore, anonymity is maintained. The money will be taken out from a KYC compliant tax paid money. The bond will be encashed within a limited period of time, and the proceeds from the bond will go only into the designated only into the designated bank account of a recognized political party. So anonymity is maintained. At the same time, care has been taken to ensure that the whole process is tax compliant and it is out of accounted money. So I think it's a new instrument which we expect will catch on very well, because our interaction, government interaction with many, many companies and others who provide political funding, that they were generating cash because they were worried about their anonymity to be revealed. Because you say, let's say a company, he wants to donate money to political parties. If he donates more money to one party and less to the other one, then somewhere, he is worried, the company is worried that he would be antagonizing some political party or the other in the process. So what companies do currently? The companies then, start making various kinds of transactions to generate cash, because cash gives them anonymity. And that is the root cause of the generation of black money, one of the root causes. Now that is today gone, because there is no requirement to generate that kind of cash. Instead, the donor can go and straight away buy the bond and deposit. So anonymity will be protected, and I think the whole transaction is very, very tax compliant, and it's also out of accounted money, as I told earlier.
Coming back to fiscal deficit, large part of it is premised on the fact that you have a pretty big disinvestment target, and going by the way stake sales have been conducted over the years, do you think that's a bit ambitious?
I don't think so. I think it's a realistic number. Even this year we are doing 45,000 crores of disinvestment. Next year we have additional disinvestment opportunities coming out of strategic disinvestments. This year the announcement was there, but it could not be done. There will be strategic disinvestments. There will be revised mechanism which is going to be put in place, which will prescribe time limits by which CPSEs will have to go and list themselves. There are the insurance general insurance companies which are also in the, which are going to be listed. Then there are the railway, the railway PSEs. In fact, I would expect these railway PSEs to have very high valuation in the market. IRCTC, for example, that is their site gets the maximum hits compared to any other website in the country. So therefore, the railway PSUs will have very high valuation. So that also augments our disinvestment proceeds. So I think 72,000 crores is very much possible, and it is very much doable.
Then we come to bank recapitalization, 10,000 crores. I mean, given the problem that most of the banks face, how would you, will there be more money on the table if required?
You see, that the finance minister himself has said it in the budget speech. Currently 10,000 crores has been provided, which is in line with the Indradhanush roadmap. If more money is required, it will be provided, that the finance minister has said. Now, with regard to the problem of NPAs in the banks, the regulator has already come out with various frameworks. The government has provided the recapitalization money over the last 2 years and again next year. The government, last year the government has amended the the Sarfasi Act and the Debt Tribunal, the DRT Act. We have also liberalized the FDI policy relating to the ARCs and the securitization receipts. This year's budget also, an announcement has been made that the securitization receipts of the ARCs are going to be listed in the stock exchanges, which in fact will improve the valuation of the SRs and will open up new windows of accessing more resources to the ARCs, which will definitely help the process of rehabilitation or resolution of the stressed assets. So on its part, government has taken whatever action was required, and whatever further action is required in the future, government will continue to take those action. Now I think it's for the banks to really make use of the framework provided by the regulator and the other changes, legal and other changes which the government has carried out, and settle their stressed assets.
A large part of the deficit also goes into, it's because we have a huge sort of a social sector spending program. And one idea that has been generated in the economic survey was universal basic income. Will it become sort of a reality in the near future, or is it still, there are lots of nuts and bolts to be tightened before?
You see, UBI, that is universal basic income, government has not taken any decision on this matter as yet. It's an idea which is placed in the public space for discussion, for encouraging a constructive dialogue or a debate in the public space. Government hasn't taken any decision, and it's a very complex matter. How are you going to, complex matter in the sense that how do you deal with the existing subsidies given by the center? How do you deal with the various subsidies given by the state governments, which incidentally is higher than the subsidy of the what goes out of the central budget? If we are looking at our major subsidies and the kind of subsidies states are giving, like for example free agricultural power, then on the other kinds of subsidies they give as a top up to the subsidy which the center provides. For example, in crop loan interest subvention, center gives a certain kind of subvention. There are many states which give add-on subventions over that. So how are you going to deal with these existing subsidies? Is universal basic income going to replace that, or it is going to be in addition to that? If it is in addition to that, there is a question of affordability of the states and the center. I think there is a need for greater amount of public debate and discussion before anything can be, any view can be taken on the UBI.
Going back to capital investment, if we read the budget documents carefully, there's been a huge jump in public investment in the last quarter of the financial year that we are right now. It seemed about 110 compared to what it was the previous year in terms of capital investment. Do you think there is enough absorption capacity for this kind of spending in the last quarter?
You mean in current year?
Yeah, in the current year.
No, current year budget, it is like this. You see, whatever additional money which we are giving, we started the meeting with the various ministries for the revised estimates, and this additional money which you are saying, it emerges out of the revised estimates. Now, revised estimates discussions took place in the month of October, and it was over by middle of November. So, the ministries which have got this additional money, they knew about it in the month of October and by 15th October. So, therefore, they have operationalized and they have taken action.
And like it's going through right now? I mean,
yes, very much. Very
dispersals and...
Yes, very much.
So, it will be like they have the absorption capacity and they have the schemes.
Certainly. So, because that is something, when we provide additional money, we are also very careful to see the absorption capacity, and we don't like government money to be just parked here and there when government itself is borrowing either from the open market through the GSEC route or through the treasury bill route, because there is a cost, money has a cost. So, therefore, we will not be borrowing merely to show higher expenditure.
And in terms of the HRA areas for government employees from the previous pay commission, is there a roadmap that's been decided? There's a committee there?
You see, usually all allowances have prospective effect. Unlike salaries, unlike pay, where there is an arrear component to be given, allowances are usually prospective.
So, I mean, is there a rollout date? I mean, would you...
I think the committee is examining it. So, we have to wait.
So, there's no contingent liability from this decision?
No.
It'll all be prospective?
Not to my knowledge.
Karnataka has said Apple has decided to invest in India and start manufacturing. I mean, any truth in that? Because...
No, I am not aware.
Okay.
I am not aware, because you are aware that earlier also Apple approached the government to set up, to sort of invest in single brand retail. And as you know, in single brand retail, there is a condition for 30% local sourcing. Now, they wanted that condition to be relaxed. We took a view in Finance Ministry that there was not sufficient ground to relax that condition. Government felt that 30% sourcing, local sourcing is very important, because government was keen to give a boost to domestic manufacturing, and we don't want to just become a trading nation. We also want to remain a manufacturing nation, and the Finance Minister has mentioned that, as a manufacturing country, we have risen from the 9th rank to the 6th rank. So, therefore, it was not accepted. Now, if Apple decides to set up a manufacturing plant in India, I think they are most welcome, and it's definitely a good news.
But there's no dilution of the local sourcing norms as yet. I mean, there's no in principle.
I am not aware of any proposal which has come to that effect to government. I am not aware.
Or within the government, is there a thinking that...
I am not aware of any proposal which has come to the government. It is possible that they might have approached and held some discussions in the, in some other ministry. But I am not to my knowledge.
So, as of date, there is no rethink on the 30% sourcing in the government?
No.
On that note, thank you, Mr. Das.
Thank you.